Okay, so are rates going to actually be in the sixes, maybe by the end of the week? Well, that might be on the agenda. So that's what we're going to talk about today. Why have rates gone from 7.5% to about 7% in the last 4 to 5 trading days? That's what we're going to discuss. My name is Dan Free. I do this on a report on a daily basis to inform you guys what's going on in real estate. So I really don't predict or give you any emphasis on what's going on with home values because it's so relative just to your area. What I mean by this is if you're in San Diego, you probably have a house that decreased in value maybe 10% so far this year. If you're in Chicago where I live, our house prices are still year to date, it's up 4.4%, and that's where we usually are. So it depends on where you live. So nobody can really say, well, the housing market's going to crash all over the country, to unrecognizable numbers because you don't know because it's so sectionalized. So in today's agenda, what we're going to talk is the economic calendar. What's coming up on the economic agenda that might force the Federal Reserve either to raise rates further or start to reduce rates. That's what we're going to talk about next. So let's go over to the economic calendar that we have for today. So today is Thursday, August 31st, the last day of August. We had the PCE numbers come in. What is the PCE? Well, it's the inflation number that the Federal Reserve puts the most concentrated weight on, okay? What they look at is month over month core PCE. So let's break it down right now. So right now, year over year, we went from 4.1 is the last reading. Analysts thought it was going to come in at 4.2 and they nailed that right on the button. It came in at 4.2 year over year. Now we get to the core PCE month over month. This is the one number the Federal Reserve really concentrates on. It was up 0.2 previously. They expected it to remain at 0.2. It came in right on the button. But I have some good news coming down the pike on this information. But the one news that scared me a little bit was initial jobless claims right here. It actually didn't go down. It actually went it didn't go up. It went down. So that means less and less people got laid off. Now, why do I say that? I'm not trying to be mean or rude to people that lost their jobs. What I'm saying is that that's what the Federal Reserve wants. They figure the more people that are not working, that means they don't have the money. They can't be spending. If they're not spending, inflation is going to come down. That's their thought behind all this. Okay. But if they give a lot of their rate hikes some time to basically sink into the systems, it's actually working. And a lot of the agenda that we had throughout this week is actually proving that. And that's why you're seeing mortgage rates went from basically 7.5 just the other day to we're just teetering above 7 right now. So that's what's going on right now. So based on the news that came out today, just on the PCE, what's the markets telling us? Because I want to look at the broad markets. So you're looking at here, the Dow Jones is up, S&P's up, NASDAQ up, and oil's up. Oil's starting to scare me because oil now is at $82 a barrel, and that's kind of scaring me because that's a huge piece of inflation. But the biggest piece of inflation, or the biggest chunk of the numbers in inflation, is housing or shelter, okay? What we see right now is the PCE measures of shelter slowed to 7.8%. Well, the Federal Reserve, the number they've been monitoring with this at is they've been telling us it's been at 8% or 8.2, or some factors you can see is sometimes they have it as high as 8.8%. So this is the number that just came out at 7.8%. So you might think, Dan, that's only 0.2% off of where we were. Well, that 0.2% is bigger than you think because shelter makes up 40% of the inflation number. Okay, so if you have that number go down 0.2% and our inflation rate right now is about 3%, that means we're going to be teetering back into the 2% range that the Federal Reserve wants. Now, are we going to be at 2%? No. Will we be there eventually? Probably. But will this bring us back into the 2s to maybe make the Federal Reserve say, okay, we don't really need any more rate increases? So that's one of the things I want to talk about here shortly as well. The next thing is we want to talk about is what does the Federal Reserve, how do they play a part in this? Well, what they manage is one thing. They manage one interest rate, and that's the federal funds rate. Where that rate is today is at 5.5%. So what we want to look at is what are the markets telling us where the federal funds rate is going to go from here? Is the Federal Reserve going to actually continue to raise rates? Or are they steady? Are they not going to do anything? Or are they going to pivot? Well, I don't think they're going to pivot. They probably won't pivot until the first or second quarter of next year. But the markets are telling us right now, right here. This is what I look at on a daily basis. What I look at is the CME Fed tool. Stay up to date with the Fed's latest probability that they will change rates. Okay, so what this is telling us is what's the likelihood that the Federal Reserve will change the target fund rate at the next meeting? Well, you go through here, the first thing I'm going to look at is what the current rate is. So the target rate right now is 5.5 to 5.25 to 5.5 right through here. The probabilities of them changing it at the next meeting, 90% chance almost that they are not going to change it. So no expectations that the Federal Reserve is going to change rates at the next meeting. Now, the meetings going forward, what they keep telling us, and if you monitor the Fed's speeches, all members of the Fed, what's kind of scary is they're saying they actually are repeating the same phrase, every one of them. So I think it's kind of scripted. They're saying inflation is still too high. We want to make sure that we stamp it out completely, and we're going to do everything we need to do, including increasing rates further to heat off inflation. Every one of them says, that's not what they say exactly, but every one of them are saying basically the same thing. They've never really been on this same path together, but right now it seems that they are, and that's kind of scary. But why I say that is I think they're just pumping that out to the markets to let the markets do their jobs for them, because you're seeing the bond markets changing and so forth. So continue to watch my channel on a daily basis. If you're a little confused, you'll get it over time. It's like Economics 101 for you class. The more classes you take, the more educated you get. So based on all this stuff, what am I seeing, or what's the markets doing right now? They're actually doing nothing. The bond markets are flat. Okay, so I talk about the bond markets and the MBS market. So let me explain it. Somebody asked on YouTube yesterday, they said, Dan, can you explain how the price and the yields work? Because you say that when the price, here's the price of the bond, it's doing nothing. But when it goes up, rates come down. And when it goes down, rates go up. So let me explain all this to you. What you're seeing on your screen right now is an MBS market. It's 5.5. So there's different coupons and whatever, but we won't go over that today. What this is it's a mortgage-backed security bond that trades on Wall Street. Okay, so let me explain to you how this works. So if you have a bond in your hand, you invested in a bond. When you turn that bond in, you're going to get its face value. So let me explain this to you. Let's say, hypothetically, I'm buying a mortgage bond that matures next year, right? And that bond's face value is $100. Meaning, when I turn in my bond to you, you're going to give me $100 back. Okay, well, let's do some two extremes just to show you how the numbers work. If I paid you, okay, let's say the price of the bond. If I paid you $50 for that bond, $50 today, and next year I give you the bond back and you give me my $100 back, the face value of that bond, what's my yield? My yield's 100%. I doubled my money at $50. I gave you a low price, gave you that money, you gave me $100 back, and I got 100% yield, double my money. Well, let's go to the other extreme. Let's say I give you $100. You're like, Dan, if you give them $100 and they give you $100 back next year, you're not getting anything. Exactly. So let me explain it. I give you $100 today for that bond. And then next year I give you the bond back and you give me my $100 back. What was my rate of return? My yield? 0. So do you see how when the price goes down, the yield goes up? There's an inverse or a yin-yang effect. Based on the data that we have right now, the markets are really doing nothing. You just saw the MBS right here. It ticked up to 3, but it's basically flat. The markets are digesting the data that they got today. It's really just net neutral. I don't think really much is going to go on. So that means rates are going to stay steady most likely today. So here's where rates are today. These are the top 6 products people use when they're buying or refinancing a property. These are issued by Mortgage News Daily. What they do is they survey lenders all over the country and they ask them these 5 questions. I'll put it over here. 5 questions. 1, well, I'll give you the scenario behind it. 1, it's a first-time home buyer. This is where these rates come from. First-time home buyer buying the primary home, and it's a single-family home. Okay, those are 3 criteria. Next thing is they have a 740 credit score, and they're putting 20% down. Those 5 criteria, that's what they send out a survey on, and lenders respond, and here's the rates that they come up with. So it goes from 30-year fixed rates to 15 years to jumbos to ARMs to 30-year VAs and so forth. So these are the average rates out there. So you might be saying, Dan, what do I qualify for? I'm not putting, I have a 720 credit score and I'm looking to put 5% down. Well, how do you figure that out? Well, let's go over here. What I need you to do is go to my website. It's therateupdate.com. What you're going to see is this right here. You can do many things to reach out to us. The first thing is, check out some of the tools we have up here. The calendar, fantastic. Loan estimates. Right now, if you went to a bank and you locked in your rate last week, that rate was 7.5, and now you're seeing, well, Dan, rates are down about 0.5%. What can I do? Can you help me with this? Well, do me a favor. Upload your loan estimate into this bucket right here. What we're going to do is we're going to analyze it and get back with you within 24 hours and say, you know what, the deal you got is fantastic. Keep it. Or if you'd like to make a change, here's what we might be able to offer you. Okay, so that's one thing. 2, if you haven't started the application yet with anybody, we'd love to be your advisors. I'm a mortgage advisor licensed in all 50 states and would love to help you. We're a bank, And we're also one of the country's largest mortgage brokers. So that means I can use all of our bank products as well as about 75 different lenders out there. I can use their programs and their rates. So let us do all your shopping for you. So how do you do this? Well, the first thing you do is hit the Apply Now button. It's going to ask you some questions to kind of filter you to who you need to talk to on our sales team, and you're going to be automatically linked with that person. Or if you're like, Dan, I'd really rather call somebody to talk this through and figure out what I can do or can't do. Well, scroll down to the bottom. You're going to see all kind of calculators here and what kind of payments you can afford and so forth. But if you go all the way to the bottom, we're going to see right here 3 things. 1, you can subscribe to my newsletter. I think it's fantastic. Check it out for yourself. I don't sell the data. It doesn't cost you anything. You're going to get a daily update and also an end of the week summary of what's going on. The next thing is you can give us a call. Our number is 844-775-LOAN. That's 844-775-5626. Or if you just have a question and want to get with me, shoot me an email. My email is dan@therateupdate.com. So thanks so much for watching, guys. God bless. And if you haven't yet subscribed to my channel, please do down below. So every time I post a video, you get an alert. Take care. See you tomorrow. Bye-bye.